I also wanted to say thanks to our sponsors. Thanks for Orange for hosting us. And also pizza provided by Cloudflare for tonight. And so definitely give a round of applause for these guys. And then tonight we'll have part of the welcome. We'll have a few folks from Orange come up and do a welcome.
So my background is technology, engineering, and specifically wireless technologies. So I focus on the radio access here at Orange Silicon Valley. And I've been kind of following all the updated things that are happening with 5G rollouts in the US as well as worldwide, and specifically as it applies to new technologies, new small companies that are trying to disrupt the way we'll see 5G rollout in the future, and hopefully for the better. So just some highlights. Hopefully all of you have been aware that 5G has launched in a number of countries in the US, Asia, and Europe. These rollouts have been mostly very limited into some, again, it's not going to be the full-blown out 5G that most of us are hoping for. It's kind of more at the trial phase at this time, and if any of you have tried out in the US, some of the 5G networks, it's very limited, and in some cases it's not nearly the speeds that you would like to see, at least depending on the type of network that you're using, or the locations are extremely limited due to the fact that they're only deployed in a very few small cell sites throughout the US. All carriers, in fact, in the US have launched some form of 5G, but very, very limited, and we're going to expect kind of a full-blown out, real rollout of 5G next year in 2020. There you'll be seeing faster data rates. Latencies will be similar than what we have today with 4G, which is something that the two main things that people talk about with 5G being rolled out is much faster speeds, faster data rates, but also lower latency. The lower latencies we won't really see until probably 2021, 2022, and so forth, where they'll be lower than the current latencies. If any of you have tested on your phones, you'll probably see an order of between 30 and 60 milliseconds with your current 4G cell phones. But as Tina just showed the video with unveiling the phone, and actually, I don't know if you noticed, it said 4G on the box, but soon there will be say 5G, and you'll actually notice a significant improvement in the speeds that you'll see. And the improvements will be anywhere from, it could just be 20%, 30% improvement of what you're seeing in LTE, but it could be also depending on the frequencies that are being utilized by your phone and where you're located. It could be up to 10 times the speed, which is super, super fast. Talking about speeds that are, a gigabit per second directly to you, to your cell phone and above. So it's super, super fast speeds, which can enable very fast downloads, can enable 4K, no problem, streaming video, and many other applications that require significant amounts of bandwidth and data rates. So as for Orange, we launched 5G in Romania just, I believe, a month or so ago. And I guess the way to kind of see these launches that are happening throughout the world, the technology is pretty much ready. In most cases, what's usually not ready is the spectrum. And the spectrum really needs to be available, made by in the US it's the FCC, in other countries whatever regulates the spectrum, the government agency, and that's happening as we speak. The FCC actually started in the US quite early, so there's already some spectrum available, specifically in the higher frequencies, and I can kind of showcase a little bit of that here. So this is a kind of a big chart that's put together by Qualcomm earlier this year, and it showcases kind of all the frequency bands that will be utilized by 5G. And you can see my mouse pointer there from the lower bands below 1 gigahertz. T-Mobile, AT&T actually just recently launched some 5G on 850 megahertz. And you can see some other countries also that will be planning on launching 5G below 1 gigahertz. These bands generally don't have a lot of bandwidth, meaning they won't give you very fast data rates. But what they will give you is good coverage. So nationwide coverage of 5G likely will be in these lower bands right here. In these bands here between 2 and 5 gigahertz, this is what we call the mid-band. These will give much higher bandwidth, in the order of hundreds of megabits per second, maybe even going up to 1 gigabit per second, which is the case actually in our deployment in Romania, 3 cities in Romania, and the peak speeds are right around 1.2 gigabits per second, and those are using the bands, the mid bands right here. Now, what the U.S. started kind of initially, as well as some other countries, including South Korea, is actually targeting these very, very high frequency. These are called millimeter wave bands. They have extremely short coverage, very, very small coverage in the order of 1 block. They don't go through buildings, they don't go through trees, but they give you extremely high data rates. So these data rates can be 2 gigabit per second and above, so extremely fast. So Verizon and AT&T have both launched it. AT&T only in its enterprise version. We have a phone here, and we've tested, and seen data rates up to 600 megabits per second on some of the AT&T networks in downtown San Francisco, as well as in San Jose. Verizon has launched in some other cities throughout the U.S., and people have noticed data rates up to 2 gigabit per second on the Verizon 5G network. The big difference here is that this is really meant for extremely dense areas where you have lots of people that want to download lots of capacity, and that's really where this will benefit. Not so much in the rural and suburban areas, but really in the urban areas and downtown locations, stadiums, anywhere where you'll have a lot of people. And Verizon and AT&T just started, so they're going to be deploying that further next year and even probably to 2021 as well. So what can we expect for 5G in 2020? As I mentioned before, the US carriers do plan on deploying nationwide low band. This is sub 1 gigahertz 5G by H1 to 2020. Let me just move back because I did talk about I did have one slide here. I said 5G NSA, and I try to avoid too many acronyms because I know many people aren't totally familiar with a lot of the acronyms. Hopefully 5G everyone knows. 5th generation, but NSA is not the U.S. government association, but it stands for non-standalone mode, which is the first kind of version that carriers are deploying of 5G, which means it uses a lot of the existing network that the LTE network uses. We call that the core network, and the radio access network is actually the new 5G part. Now, what that means generally is that that's the one that's first to deploy because you don't have to redeploy your entire network, including your core network, which is going to be happening probably in 2021 and 2022 when the standalone version will be coming out, which will be having the new 5G core, and that will have a lot more features that will be supported. Specifically, one of the big ones that people are talking about is network slicing, where you can actually have a slice of the existing 5G network dedicated to a particular use case. It could be like, emergency response of people or any other specific enterprise that wants a dedicated end-to-end. Think of it like almost a VLAN, a virtual LAN, but throughout the entire network, including the 5G network. And you can kind of dedicate that access, and that's can be very, very compelling, especially when you want to target quality of service for very specific applications. Today, most of today's cellular networks run in kind of best effort. And of course, with LTE, generally it's pretty good. You can get relatively low latencies. But at the end of the day, if there's network congestion, you're going to be affected. And I'm sure all of you have probably been affected in various areas. And there's a lot of people, and you can't get the content you want very quickly. So that's one thing that the standalone version with the new 5G core will support. Back to this slide. In the US specifically, there's a new band that will be available. In the 3.5 gigahertz. It's called the CBRS spectrum, Citizen Band Radio System Spectrum. And basically, this is a combination of many different chunks of spectrum that will be available that the US, the FCC has kind of aggregated in order to make more spectrum available for 5G. There's actually an unlicensed version that people can use kind of similar to Wi-Fi, but in the new band, they have to actually access a database to make sure they can transmit in that area. But there actually will be some unlicensed spectrum available in this 3.5 gigahertz band, starting pretty much at the end of this year. This is what they say. Some very small carriers will perhaps start to offer that already. The limitation for that is you're not going to be able to transmit as much power because it's unlicensed. And of course, it's going to be depending on where you are. Some areas might not have any spectrum available because there's other users that are using it, and in other areas, primarily rural and suburban areas, there might be more spectrum available. However, what I have here in this bullet point is actually what's going to be licensed in the US after June 2020. And basically all the carriers in the US will bid and will pay for this spectrum. And this will be giving them another large amount of spectrum that they can deploy 5G on. For example, in Europe, a lot of the deployments will be specifically on this 3.5 gigahertz band. So you can also see a lot of the higher end smartphones will support 5G. And today you already have a couple of them that support 5G. And now, as I mentioned in the previous slide, there's so many different bands of 5G. So some phones don't support all the bands. They might just support the upper band and not the lower bands. But I think next year you'll start seeing the higher end smartphones supporting all the bands of 5G, meaning the lower, the mid, and the upper bands. And of course, the 5G applications, people have been discussing this for many years. What's the killer apps for 5G? And we hope to see them next year. Basically, it'll be about more kind of things that require very, very high throughput, and eventually things that will require lower latency. But as I mentioned before, that's not going to be something we're going to see in the network until probably end of 2020 or 2021. And of course, another benefit that we'll have for the applications is MEC, or mobile edge computing, which will happen starting, we'll see, maybe next year or 2021, which means then that will actually bring down the latency without the necessity of deploying the 5G new core, the standalone version. So actually we will see an improvement in latency because the server that you're going to be connecting with from the end user applications will be much closer to the cellular network, and it won't have to go through the entire core network and through the internet to AWS or whatever cloud server you're talking about. It'll actually come, it'll be able to stop right where the radio access network finishes. So that's pretty exciting as well. And that's all I have. Thank you.
Welcome everybody. I guess we'll start with Vinayak. You can start with you to introduce yourself, name, where you're working, what do you do at work?
Excellent. Good evening, everyone. My name is Vinayak Naik, and I am a principal at Wipro Ventures. Wipro Ventures is the corporate venture arm of Wipro Limited, which is a global systems integrator with headquarters in India but doing business around the world. Wipro Limited does about $8.5 billion a year in terms of systems integration revenue, which includes IT services and other technology consulting services. We count over 1,000 enterprise customers around the world, and of 150 of which I would say are in the Fortune 500. So Wipro Limited basically has a lot of presence, in different industries as well as different verticals and so on. What that means for us at Wipro Ventures is that we get a front seat view of what our enterprise customers are facing in terms of technology challenges, as well as in terms of what the opportunities are for startups to be solving some of those challenges. And that is certainly one of the benefits that we leverage as part of Wipro Ventures. We are enterprise focused only in terms of our investments, and one of the mandates for us as investors is to take these startup solutions to our enterprise customers as part of a Wipro offering, so the startup makes revenue as well in addition to taking investment dollars from us. So we are ROI investors as well as strategic investors in the true sense of the word. I'm very pleased to be here today, and I'm happy and looking forward to sharing some of my observations over this course of this year, as well as what is coming down the pike. Thank you.
All right, welcome. So my name is Jay Onda from Silicon Valley. I think you heard majority of the spiel of what we do here, so I'll just be quiet. But I mainly focus on startup investment activity, trying to understand kind of the emerging disruptive and innovative opportunities, both for actually for all the properties of Europe. And we look at it from a wide range, mainly focusing on what's happening on Silicon Valley and looking to build bridges through multiple properties of what we do.
Hi everybody, I'm Al Guerrero, coming from Los Angeles. The only Angelino I think on the panel here. I'll tell you a little bit about Silicon Valley Bank. So we are a bank that's very different than the traditional bank. We exclusively focus on banking the innovation economy, and that's represented by our market share. We bank something like 50% of all VC-backed companies in the United States, and something around 60 to 65, maybe even 70% of all VCs in the United States. So we are very, very focused on that sector. I myself work out of the Los Angeles office. I'm a managing director. I focus on consumer internet startups, primarily Series A and above, and I've been there for 3 years. Prior to SVB, I started a corporate venture fund for a media entertainment company called Technicolor.
Hello everyone, my name is Luigi Congedo. I'm principal at BootstrapLabs. BootstrapLabs, I think tonight is one of the, it's all like corporate ventures, so thank you for having me here. We try to invest at Bootstrap. We've been around for 11 years, so a little bit of story. I don't know how many of you have ever heard about our firm, but been around for over 10 years, and in the last 5 years we decided to focus on applied artificial intelligence. So our goal is to invest in core AI technology that can drive ROI in specific industry. This is one of the reasons why we've always been talking about applied AI and not just AI. The firm is focused on early stage investment, which means pre-seed and seed stage is our entry point. Usually the check size goes from like $500,000 to $1 million. We also have capacity to follow on, as you say. So we like to keep on investing once we invest in terms of like industries. We do believe after observing the AI space for like a few years now that it's not a matter of where to invest, it's when, and AI is going to ultimately impact every other areas of businesses as well life and our future. Today we've been doing a lot in healthcare, enterprise productivity software, more traditional industries where I think 5G will drive a lot of push innovation a little bit faster, as well as computer vision is transforming industry overnight, going from zero to digital world. But the core, I think, that on our investment is like everything that is AI today is very much built to augment human capacity. So every time we have that intersection between core technology, deep knowledge, expertise in the industry, and see a clear ROI, we like to engage. So that's a little bit about us. Thank you.
Thanks, guys. All right, so let's get into it. First question. Let's talk about the headlines. Everyone's seen the headlines, right? This year. We saw, IPOs with Beyond Meat. We saw Uber, Lyft. What else? We saw Pinterest, Peloton, Slack, Zoom. I mean, we saw a ton of companies go IPO this year, which was great. Great for some folks and not so great for some others. And we also kind of have, on the other side, of the spectrum, we have a lot that are on hold, right? We have, issues with WeWork. Airbnb, I think it's also holding off, and some other companies. Let's have a quick, what are your thoughts, at least on this year as an IPO year? I mean, a ton of companies. I haven't seen it this busy probably since the early 2000s. If you have any thoughts on, will 2020 be similar, or will 2020 be more conservative than it was this year? Thoughts on that?
Yeah, a couple of data points in preparation for this panel that I was looking up. I definitely don't have these data points in my head randomly, but I was looking at, in terms of the IPOs for this year, and we were talking a little bit about that, Mario, beforehand. There was something like $280 billion of realized value as part of these IPOs, and so again, they may have gone down after they went public, but the amount of value that was created, that's primarily for venture capitalists and the founders that were, a lot of them here in Silicon Valley, is really a huge moment for the tech industry. And I think the other thing that's worth noting is of all the companies that have gone public, Uber and Lyft have done poorly, but the majority of them are still trading higher relative to their last private valuation. And some companies like Zoom are doing like 20x relative to their last private valuation. And so there's a lot of noise and definitely some issues and trepidations happening with like WeWork and other things like that. But make no mistake that 2019, there was a huge amount of value that was created that allowed for these funds to then return capital to their LPs, which is going to allow them to raise even more money. And I think there's something like 50 unicorns that were created in 2019. So even though these companies are going public, there's still this pipeline of unicorns being created. So another stat that I was reading is there is something like $37 billion of dry powder from these very large mega funds, which are billion-dollar funds. And so even though 2020, there's some questions about what's going to happen economically, there's a significant amount of dry powder that is out there, and interest rates are super low, so people are looking for attractive returns, and so venture is an interesting asset class for a lot of limited partners.
Just explain dry powder for some of us that may not.
This is committed capital from individuals that or institutions that have committed to invest or commit capital to a venture fund who can then use that capital to invest in companies. And so that capital is there as soon as they call upon it and as soon as they ask their limited partners to then wire the money in. But that is like money that is effectively there for them to invest if they haven't deployed yet. That's what that means.
Yeah, no, I think it's a great overview. One big trend that I think we're going to keep on hearing, and I think I'm personally very excited to see how the industry will evolve, is direct listing. I think that one has been a big topic in the VC industry, and I think it's kind of interesting because if you look at the overall performance, like company used to be public in like 10-year cycle, maybe over 20 years ago, that was the average. That all VC industry is actually structured around that 10-year cycle, and today it takes over 15 years. There is more private capital, but then there's also other macroeconomic factors of why. So I think we're going to see, this year's been exceptional for IPO, for tech IPO, especially for the private investor. But I think we're going to see a lot of changes moving on. And I think direct listing is one. More talks about secondary market where VC can actually start liquidating before going public. So I think those are some also of the points I think I see emerging more and more. And this year there were some big conversation with a lot of VC involved too.
Interesting. Those are good points. I think, yeah, because we kind of have to see through the bad media coverage to understand that there is definitely some sunshine on the other end of the news that we see kind of almost on a daily basis.
I think one of the things that has happened as a fallout of WeWork and SoftBank is a renewed focus on governance and also ensuring that all your books and all your processes are tidy and in place, because really that's the way it should be. But in the pursuit of going for an IPO and with the limelight of having rock star founders and so on, I think we have sort of moved away from keeping track of the basics. But I think the most fundamental thing that will happen going forward, in my opinion at least, is that we will see a lot more better quality IPOs that will happen because of renewed focus on governance, because of renewed focus on ensuring that any issues that might have happened with human resources or diva investors and diva founders and so on, I think will be taken care of before the company hits the public market. So overall, I think I certainly believe that 2020 will have much stronger IPOs, but of course the macroeconomic condition also has a role to play in it, and we really don't know what that will lead to. But as of now, the way things are, I think we'll have good IPOs going forward.
Good insights.
I always struggle between the amount of capital that's out there and the valuation bloat. But if you look at the well-performing stocks, they actually have real businesses. Right? They have real revenues versus just the hype and the vector of acceleration or growth. And so, I always struggle because the cost of capital is getting cheaper, right? Other industries are talking about negative interest rates. So what that really means, and then of course the corporates are coming in, right? So about 30% of the venture capital dollars invested, 30% came from corporates, right? At 31.2 billion, I think, last year. And that number is going to continue to increase. And so the corporates are actually taking a different stance, looking both strategically and financially. And they've already gotten disrupted. That was the big buzzword, 7+ years ago. and they've woken up, right? They have these open innovation playbooks, they're working with the ecosystem. A lot of times I call it, we're in an era of collaboration, so we're collaborating across industries, across partners, through government, startups, et cetera. And so I think the landscapes, it already has changed, and we'll see the maturity, maybe the professionalism of what that means between corporates and startups and other players in the ecosystem.
Yeah, two data points to echo what you guys were saying. One is, there's a company in LA that raised $200 million, and the investor had one board seat. Like, after writing that big of a check, it's kind of crazy from a corporate governance perspective, you know? And yeah, no, I think it highlights the, you know, the challenges, and I think that's the kind of the waking up that's happening in the industry.
It's good to hear. Definitely the governance part. I think going back to basics may be a good thing. Let's talk about some of the popular investment verticals, right? So talk about AI. Let's talk about enterprise. Let's also look at maybe 5G edge cloud, AR, VR. But let's start with AI. Kind of what segments are getting traction? So I mean, you could slice up AI in different segments, right? We can look at assistance, we can look at autonomous vehicle, which is a lot of money, and then there's this deep learning part, right? That's lots of money, years and years of work and research that have to go into that. So on the AI side, what's getting traction? What's because it's been hot for a couple of years now. So
yeah, I think again, I think for us AI is more kind of this horizontal layer of how you drive software, how you leverage big data, how you leverage the new infrastructure, right? And the main paradigm switch is we're going from a world where we're building automation to a world where we're going to see more and more autonomous system. And autonomous means a car, a drone, but it's also, there's a lot of conversation about the autonomous corporation. The CFO that instead of getting helped by 15 student like MBA or whatever it is, has some sort of intelligence that can actually do fraud detection, payment approval, even budgeting, etc.
Business insights, analytics.
Yeah, the combination of those going through, we went through analytics, big data, prediction, and now we start getting prescription from the software. And I think that is applied everywhere. When you look at investment, fintech and healthcare, I think are the two main industry for a number of different reasons. One of the first one is those are data-rich environment where there is a huge benefit of applying a highly expensive model. And also those industries are a little bit more. I think that they need technology. They see the need versus a lot of others. They think AI is cool, but they don't really understand what's the ROI, right? So I think there's different parts, but definitely healthcare, fintech, and I think all the autonomous driving, transportation, logistics will be the third one for me. Like I'm looking to like number of investment and activity.
Cool. AI applied anywhere else?
Well, it's nice to see that AI is getting real. Right, so you rewind a little bit, and we're all thinking, oh, maybe this is the beginning of R2D2 and C3PO, but in reality, AI is being applied, and there's an interesting stat where 80% of what we do will be influenced by AI, but it's invisible, right? It's a tool, and so a lot of times when we started looking at this, like, oh, we want to find the most awesome AI company. Now it's all about how are you applying AI to solve problems. And so the tools are becoming more mature. Tools like TensorFlow is becoming accessible. We have all these GPU services in the cloud, but it wasn't solving a problem, right? But now like the enterprise, the industry professionals are saying, okay, we see the potential. Now we're going to apply it to solve problems. And so we've seen AI on the network, we've seen AI in the cloud, all targeting a specific use case that's very industry specific. And so it wasn't, at first I was like, oh, maybe this is going to be the beginning of the most awesome chatbot in the world, but the general AI solution is a little too early still, right? And so we see the applicability, but it's in the background making us work more efficient. And yeah, I think healthcare, and intelligence gathering is the big key opportunity that people are capitalizing on. But I don't have that's the best AI company in the world, because I think they're all adding value in its own domain.
Actually, if I can add something on your point, all the AGI, which like the general purpose artificial intelligence company, which are those that raised most of the money until 5 years ago, you're talking about 100 plus, they didn't really go anywhere, to be honest. All the companies that are more vertically focused today, they're actually making revenue. And I think that tells a lot about what you were saying. And this is kind of also about how the whole technology academic landscape evolved. We went from that idea of building general purpose intelligence to we're not really able to do that. Let's see if we can apply this technology to specific verticals. So I think that's the main trend. And the other one is also the hybrid approach, where with AI and computing and the edge, we're going to see a lot of changes, and those fundamental changes in the infrastructure, we actually empower developers and technology company to really deliver application of AI in more like specific context, from healthcare, autonomous driving, industrial application, and so on. The other element, I think, is the new sensors, right? Today, computers are able to absorb new data from different sensors. I'm personally very excited about computer vision, and we have application in company we're investing where they can plug into an existing camera system on a construction site, and in a few days really having an understanding of what's going on the construction sites and provide insights to the manager. That wasn't possible until a few years ago. Another one in like the food industry, for instance, we host conferences and events at BootstrapLabs. We're really kind of community driven. We're always trying to bring people around the table to discuss about application of AI. The food industry is like we live in the world where we're going to have 2 extra billion people to feed, and the way we're doing this today is not working. Like with the current system, we're just not able to catch up. The number of people that want to go and work in the farm has been dramatically reducing. No one wants to do that. We need robots to do that. Plus, there are also all sorts of benefits where a computer can detect a bacteria spreading around. So there's like all sorts of, I think when it comes to specific application today, there's like millions of different opportunities. So again, main investment in like few traditional industry, but opportunities are everywhere today available.
All of us who have worked in a corporate environment obviously have had to deal with IT and IT issues, right? And for the longest time, I think the only thing we've had with regards to IT was, why doesn't this work? And believe me, it's not fun on the other side either. The person who's actually supporting you also has similar sentiments. It's just that he can't or she can't verbalize it as such. I think there are new solutions that are AI-driven, actually, that are making it a lot easier for these IT folks to be able to diagnose the challenges that you have with your infrastructure or your device or whatever it is. And oftentimes these are very predictive in the sense that they can actually predict ahead of time as to what's going to happen. And one of the companies actually that Wipro Ventures invested in is a company called Avamo, which actually builds AI chatbots, which is sort of in the same realm as well. And frankly, within Wipro, we don't necessarily focus on AI as such, but Avamo, I think, was one of those exceptions where it helps us, as in the mothership Wipro, do a better job, and hence we ended up investing in that company. But I think the applications of AI are everywhere, and as Jay was saying, the invisibility of AI, I think, is certainly one of the appealing factors also.
Cool. Let's talk about enterprise. And currently, like, how is the profile like for the target enterprise buyer? How's that shifting now for startups? So is it SMB is the new target? How's that shifting with the enterprise right now?
So I'll take that. So as I mentioned in my introduction, we are part of Wipro Limited, which again counts several over 1,000 enterprises as our customers. So we actually get to see how the buyer profile has been changing over the years. I think the 3 main things that I can summarize, for the audience today. The first one is that the CIO has actually been ceding power, and to a certain extent, the buying decision making to other people in the organization, like the VP of engineering or the DevOps team or the chief architect and so on. And of course, the Devops movement has a big role to play in this, right? Where you have people who are actually doing the work, deciding on what technology solutions they want to use. and the VP of engineering then ends up signing off on that particular approval, and the CIO only then validates it and makes sure that it does not break any of the corporate networks or whatever it is. So the CIO power, gradually we are seeing it going down because other power centers are coming up. The other trend, I think what we are seeing is that the CMO, the Chief Marketing Officer, has been getting a bigger chunk of the budget allocation across enterprises. And one of the main reasons for this is that a lot of the technology solutions that are targeted at the marketing organization or the sales organization are now available as SaaS. And you don't really need any integration or any other validation of any of these software solutions. So the CMO can just decide on what software to buy, and then just they're off to the races. And I think that is one of the reasons why the CMO has been gaining a lot more buying power and power in the organization. And the last one, which I'd like to point out, is that the CISO role has become extremely critical and has become extremely powerful also in terms of the say in whether it is budgetary allocation or whether it is just political power within an enterprise. And this is not hard to fathom, right? I mean, not a single week goes by without any news of any data breach or any compromise of enterprise assets and so on. So the CISO role has become super critical, not just to be sort of the fall guy, I guess, but also to ensure that the systems in place are getting better over time, and eventually you'll get to the point where you basically have an impregnable, I guess, infrastructure. So those are the three main trends I'm seeing in terms of the buying power changes.
So I mean, I'm a SaaS enterprise company, maybe early stage. Who am I targeting? I see the point now. CMO. I never really thought about that. Like, because they're using they're using different services to email, contact customers. They're doing campaign management, all these other services. But who do I target now? I mean, is it the CIO? Is it the CTO? I mean, there's some traditional roles that I would go and say, hey, let's go knock on their door. But who do you see now as the shift? I mean, besides the CIO, so does it make sense to go after the CIO, CMO, or it just depends on what vertical I'm in?
Yeah, I think it really depends on what the solution is, right? If it is a security solution, then clearly the CISO organization is where you got to go. And if it's a MarTech solution, then it's going to be the CMO organization and someone in that person's chain of command that you should be going out to. But if it is infrastructure related, then it really depends on whether the CIO is the person making the decision, or if it is part of your development landscape, in which case you might be better off going to the developer and having them use your solutions, and then bubble up the validity and the beauty of whatever you have to offer. So it really depends. I mean, I don't think there is one cookie cutter answer here, but as long as you can figure out who the buying center is, then figuring out who to reach out to, I think, is just a natural extension of that.
I'm also seeing a different maturity level on respecting privacy, right? So GDPR, CCPA, it's become a big thing. So regardless if we're talking to a security officer or a marketing officer, handling data is becoming top of mind, especially with all the AI tools. Again, it's an even playing field. 5G is going to accelerate all these things. So if you're selling into enterprise, know the buzzwords and really focus on how you're protecting that data. For us, it's really hard to share data with third parties, even if they're compliant, even if it's a SaaS platform. We have so much data that's regulated that we can't just share it with everybody just to experiment, right? And so, but that's kind of the different flavor I've seen over maybe the last couple of years, is how much they know about compliance and how confident they are that they're there to actually solve that problem and make sure that they're protecting the enterprise interest as well as providing a value-added service. So if you are in the enterprise space, really keep that in mind, because that's going to be the first question they're going to ask is, what are you going to do with it? How are you going to protect us from getting fined? I forget what crazy number it is for GDPR compliance violation. It's ridiculous. So that's probably the biggest advice. If you are trying to sell into corporates and don't know where to start, innovation offices like or Silicon Valley is probably the easiest people to get to. There are probably around 300 plus corporate innovation offices around the world, easily 150 plus CVC units. And so each organization focuses a little bit differently, but they all have websites to share about what they're interested in. So that's probably a good angle, at least to start knocking on doors to see where the interests align. Yeah.
I think one of the main trends I also see, and we often tell to our company at this stage, don't even spend time with a large company, is if you're a startup company, you really need to understand when is the right time, the time to market to go enterprise, unless you don't have a champions. And unfortunately, yeah, today there are a lot of available information, website, etc. But your ability ultimately as a founder to build that relationship early on is important. And there's not a checklist. It really depends on the space you operate, etc. And one thing I learned by helping a lot of early stage companies navigating that corporate environment is that today there is mainly two types of corporation when it comes to innovation. One type which is more about kind of building, integrating with like fast-growing emerging technology. And those are the ones where you maybe want to start like at least talking with them early on. And the other category is like buying technology. When it comes to buying technology, you need to have a ready-to-go solution. Otherwise, you're wasting your time. And if you try to build that solution too early, you end up being the left shop for that corporation. So I think it's also about the mentality, the culture about the corporation you're trying to engage with.
Want to go to the next question? So let's look at one of the highest impacting technologies in the next 20 years. And that's 5G, right? 5G and edge cloud, pretty much, probably for the next 20 years, that'll probably be the most impacting tech that we see for consumer, enterprise, and industry. But is it really early for 5G, right? I mean, I was talking with Jay earlier. I mean, if we look analogous, late 90s, 3G, we hear, oh, it's 3G, wow, it's ultra bandwidth, ultra high band, bandwidth technologies. And, it's 20 years later, and I think the vision that we had 20 years ago is just like barely coming to fruition with LTE. So with 5G, what are expectations there? Should we jump into 5G right now? Is this way too early? What are some recommendations here for on the investment side? Are you investing in 5G companies?
We're not.
Okay.
I mean, we are not. We believe 5G is one of those. We classify those as like enabling technology, and we see 5G as a massive opportunity to accelerate a lot of the apply AI deployment. But as it is today, we don't have a core strategy around let's invest if it's a 5G, right?
Okay. And I focus again on consumer companies. So as it relates to 5G, the impact it will have in the gaming world is going to be just massive because latency is such a big issue, and I forget the numbers, but any kind of improvement in latency. Well, you look at like someone like Riot actually built out their internet backbone because they wanted to improve and reduce the amount of latency because it was such a huge ROI tied to that because with these multiplayer games, there's data just going back and forth. And being able to provide something that accelerates or makes that happen more efficiently, improves the user experience, improves their LTV, and has a huge return on investment.
Are you following Stadia, the Google Stadia announcement? So how many people have a data cap on their LTE plan? Everybody? Anybody?
Or they start to throttle it, right?
Right. Well, is it 5 gigs, 10 gigs, ish? Right. Yeah. Well, and who's familiar with Google Stadia? All right. So Google Stadia is a Chromecast dongle. It does all the cloud. It does all the graphic rendering in the cloud. So it's almost like streaming your gaming experience, right? So latency is huge. It's a huge part of the experience. There was an interesting test that was done on the first day where someone was playing Red Dead Redemption 2. Did you see this set? It was really fascinating. So 2 hours of gameplay at 1080p, a little bit less, with kind of like stuttery graphics. What's the number? Consumed, I think it was 300 gigs of data, right? If you download it on your Xbox, it's a 150 gigabyte download, right? So if we're capped out at 5 gigs on our LTE plan, this is going to be a really big issue for telcos, right? And so as 5G gaming comes, I'm really excited because it's like once you tinker with it, you're like, okay, maybe it's still in beta today, but the potential's there, right? Like, I was playing Destiny 2, great graphics. I didn't have to dump, I just bought a $130 device with a controller. Really changed how we're going to game in the future. And then when it comes to your mobile device, even more so. But the reality side is like, well, how's the telco guys going to provide this, which is still a big unknown. But still, I think it's amazing, right? This is definitely one of those game-changing technologies, and that really, the 2019 was like the main year, right? Microsoft announced their xCloud. Hatch is another startup in the space that's gotten strategic funding from groups like Samsung. And so this is going to be a huge thing and a huge push for 5G, especially in the gaming sector. But just to back up for a little bit, if we look at the last 10 years and the rise of the unicorns, part of the success is attributed to 4G. Right? Like, if you really had crappy connections, calling an Uber over 3G, it'd be a really frustrating experience. But, I don't know how long Uber's been in business, but it's less than a decade, right? And so we're still at this foundation level of deploying 5G. And so whoever is trying to raise a fund to go unicorn hunting, it might be a little too early, right? But there's still a huge opportunity on the foundation lane side. So if if you want to invest in the 5G pick and axes, there's a lot of technology that's needed to make this possible. And this is where that collaborative play is happening, right? So groups like NVIDIA is participating, working with startups. Obama is actually part of that ecosystem, really working on that B2B to X business model to make 5G a reality. But it's interesting to see, and we're all looking for these use cases. So for the last 2 years, like there's an event called Mobile World Congress. They're doing the US version every September-ish timeframe. And so 2 years ago when I went to the US one, I was like, okay, so really excited to be bombarded with 5G use cases. They had some good stories, but I was like, this is not it. I went there this year kind of expecting, the maturity of these use cases, and it's getting there, but it's still kind of in this testing phase. Like they're demonstrating what's possible. And then startups are picking up these ideas and injecting themselves into that innovation value chain. But I forget if it was you, Luigi, that mentioned, corporates want to buy a solution, right? And so if you're looking to sell to enterprise for a 5G solution, well, we need to get that infrastructure out there, accessible, and then to solve that problem that really is top of mind for the enterprise side.
No, I was saying as Uber has been benefit from 4G and a lot of all the mobile revolution, right? If you talk about iPhone came out in 2008, 2009, so that's it's not that long ago. I think when it comes to 5G, what is going to completely dramatically change our life is all the whole IoT world, and all the application around the IoT world. Because the number of devices connected and the stream of data that we're gonna have, it's just something else that we never have been able to, we're never gonna be able to manage with the current infrastructure. So I think if you are an entrepreneur trying to leverage 5G, I think that also is a very good category.
That ties into the edge computing that John Benko mentioned earlier, and the applications of AI on the edge, on the network side. It's all coming together, right? So people are slowly stitching these together. I'm sure you're seeing stuff like that too.
Absolutely. I think it's still early days, Mario, and I think as everyone mentioned, really we are building the foundation layer at this point of time. But I think the key to remember here is that 5G is not just an extension or just a small step up over 4G. 5G is radically different. I mean, it will enable use cases that we have only imagined in the science fiction realm, if you will. But going back to our position here at Wipro Ventures, we are actually interested in this space, but we have not made any investments yet because we are still fine-tuning our strategy, if you will. But the way we see it is that there are 4 components in the 5G/edge computing realm. There's the radio access element. There's the edge itself. There's the applications that run on this infrastructure, and then there is the analytics or the AI, basically that manages all the data that's going back and forth across this very high speed, very high bandwidth, low latency network. So we think that from a Wipro Ventures perspective, we are probably better off on this side of the equation, which is on the application, or investing in applications, or investing in the analytics and the AI piece, because the other 2 areas, which is the radio access network and the MEC, are they have very long cycle times. It's very core technology oriented. There's a lot of standards bodies involved. So you need to have really deep pockets as a startup to be able to make a difference there. And frankly, for us, we don't necessarily have an appetite in that area at this point of time.
I just want to put one other question on 5G. Is there are, like, we can look at Rakuten, and so there's in the future there could be some more interesting players like an Amazon, like non-traditional service providers, because of just virtual RANs and other things like that, and also the core network being virtualized. There's some interesting things that are emerging right now, but if we could take some folks, if you guys are more interested, take a look at what Rakuten did in Japan. Maybe Jay, you have some thoughts around that. It's like, could Facebook become a large global operator because of, like what Vinayak says, is like it's very radically different in terms of how their architecture is for 5G. Is that, I mean, is that plausible that Amazon and Facebook could become
Yeah, Amazon earlier this year, a few months ago, announced a IoT network. I can't remember the specific protocols around it, but yeah, global mesh network. So everybody's kind of intruding in the space in their own different way. Facebook had their telecom infra project, which was to get the unconnected connected, which was a huge push in like the rural countries, Africa being a main focus. And so yeah, I think there's all these different types of players coming in. We also have satellite communications, right, with SpaceX, and so we'll see. We'll see what this all means. I think when you're not stuck with legacy infrastructure, it's easy to start from scratch, right?
Yeah.
So kind of it's not a Rakuten story. And there are a lot of countries who are now coming online, and I think those countries have a huge opportunity to get connected and leapfrog over other countries that have legacy infrastructure.
I think like the other day I was having a similar conversation. I'm definitely not an expert on 5G and telco infrastructure, but if you look at the world today, like we live in Silicon Valley or California, and it's like this always like this little bubble, and like Africa, which is the fastest growing demographic now, we still have country where telco are not privatized yet. So that there's still a situation where the actual government owns the infrastructure. And in those cases, it's very hard to predict. I'm sure that as soon as you remove that layer of control, then multiple emerging players will attack those markets, because the cost of building the infrastructure today with mesh network and others is way lower.
I think if 4G is an example that we want to use, right? I mean, the infrastructure players are the ones who pumped in a lot of money and established this this new technology of 4G, but the value capture really went over the top, right? I mean, most of the companies that really made it big are companies, as you mentioned, like Uber and so on, which were not even in existence, when the earlier standards were being thought about, right? I think a similar paradigm we would possibly see in 5G as well, where even though the infrastructure players or any player in sort of the hardware ecosystem are setting the building blocks here, the real killer application is still to be created, and I'm fairly confident that the Facebook of what Facebook and Uber were for 4G, the similar applications for 5G are probably another 5 years away. And yeah, who knows, right? I mean, AR, VR gaming maybe. I mean, maybe $100 billion company is probably still waiting to be created, and that could be an opportunity for.
I think that's what makes our industry very exciting, right? Let's move on to consumer. And I know, Al, this is kind of like your expertise, but let's look at consumer segments. Look at mobility. How many people here ridden a bicycle, scooter? You guys rented something, at least, or even a car in the last couple of years. Also, let's talk about food and maybe e-commerce, and then what trends are we seeing in these different areas? And they're all impacting consumer.
Yeah, so I get to talk about all the sexy stuff, in particular in LA, where we hang out with Lady Gaga and Gwyneth Paltrow. LA is interesting, and again, I'll talk about consumer from an LA perspective, and again, the innovation that we see mirrors the industries that are dominant in LA. So it's health and wellness, because everyone's hanging out on the beach. It's entertainment, media and entertainment. But media and entertainment is kind of broadly speaking. You look at like the rise of podcasts. You look at the rise of gaming companies, because Activision and Riot and other folks have big presence there. And then e-commerce, which increasingly is kind of this blend between media and building a community and then monetizing that community via commerce. e-commerce, and a lot of times via influencers. And so the best example is Gwyneth Paltrow at Goop, which I was kidding about hanging out with her because I don't hang out with her, but the company that she's built is really fantastic. It's a really fantastic company, and why is that? It's because she's built this community that she's authentically connected to via her social media channels, and they love her and like follow her, and someone like Lady Gaga as well. Again, I was kidding about Lady Gaga, but she has a makeup company, and it's called House Beauty, and like her community is just so incredibly passionate about what she does and the lifestyle and the brand that she represents, and they'll basically do anything to support her. And her beauty product is still in the early days, but it's just skyrocketing, and so is Goop as well. So it's really interesting. We're seeing that happen in LA because a lot of the brands are kind of influencer led, and LA is kind of a capital for influencers as well, with Snapchat and other kind of key industries, the media entertainment industry being there as well. So the good thing is, I think in LA, in the consumer market, 8 years ago was all about digital media. And now it's actually really, really diverse, which is really fantastic, and I think a healthy sign for the market and the consumer market in general. So you have equal parts. Again, we bank about 50% of them, so we have a pretty good view of the market. It's equal parts gaming, it's equal parts esports, which is the playing of video games, which is quite honestly, at the end of the day, just content creation. It's just gaming content creation, and then they're selling hoodies and a lifestyle that people. I wear my esports hoodies in the supermarket and buying something, and I get approached by kids who think I'm an esports influencer, and I'm not. My kids maybe, but I'm not. And so it's equal parts gaming, equal parts esports, equal parts digital media, which includes like podcasts, a lot of e-commerce, a lot of mobility. Bird was started in LA. Wheels, which is a competitor, which is more of a electric bike, kind of a hybrid, was also started in LA. A lot in health and beauty, which health can be even include like pets, the health of pets, and makeup companies, and companies like Headspace, which is kind of like meditation apps. All of those are being created out of LA, and our portfolio in the market is really kind of equally distributed across all these different industries, which I think is really fantastic. And again, they're all kind of LA in their own unique way.
I think, yeah, Headspace, I was, there is $100 million. When I read that number, I was like, it's a meditation app.
I'm a subscriber to Headspace. I've been doing it for almost 2 years now.
I use it, I love it. But when I read like $100 million, I was like a little bit surprised.
Actually, I kind of buried the lead a little bit. The most interesting consumer-related news that came out in the last couple of weeks is a company called Honey was acquired by PayPal for $4.5 billion. Honey is a client of mine. The amount of wealth, and a great business, so the wealth was created because they built a good business, but the amount of wealth that was created in the LA ecosystem is a game changer, and it's primarily LA investors. These guys struggled like hell to raise capital, but to their credit, they kept on pushing forward, and some of the returns on the funds are actually become public, and they're like comical. One of the earliest investors actually incubated them, called Mucker Labs, invested a total of $3 million in the company over a variety of raises. Their fund size is $20 million. Their return on the $3 million check was $285 million. Right,
I love Mucker Labs.
So
they're based in Santa Monica.
Yeah,
and,
I love those multiples.
Awesome,
A lot of people love them right now, and so it's like silly, right? It's like really, really silly, but awesome at the same time. And the other investors are primarily LA firms as well, and so I think that's another inflection point for the industry, and we should continue to see. We'll see if there's like a PayPal mafia type of equivalent. Well, we'll see like the Honey mafia, and we'll see more founders and more funds kind of spawn out of that.
I mean, you guys, True Car is also down in Santa Monica.
Sure.
Yeah,
Sure.
There's some Yeah, it's an interesting, cool ecosystem that Venice and Santa Monica, like Silicon Beach, right?
Yeah, I mean, the interesting part is, yeah, about 50% of it is in the west side, so Silicon Beach per se, but downtown LA is growing like crazy. Honey is in downtown LA.
What's that, Made in LA? Is that what's
Is it, what's the question?
Made in LA, I think?
Make in LA is another fund, and that's the problem with the successes in the various regions of LA is that means I'm in a car a lot more in LA, and traffic, and so I need to soup up one of those scooters and go on the 10 freeway to get there faster. So it's not good for me personally, but it's great for the ecosystem.
Another question for you, Al. Like, what do you for Silicon Valley? What other services do you do for your customers? I mean, what's kind of your role in LA with it?
Yeah, sure. So we have kind of two big buckets. We bank the startups and then we bank the venture funds. I'll focus more on the startups and the venture funds because that's my area. And so we have three teams. We have the early stage team, which is really pre-seed and seed, and we bank. And we cover basically every incubator and accelerator in LA. And again, this is like illustrative of how we do it in every market. I'm just giving the examples as it relates to LA. And for most of those clients, we give them free bank accounts and a credit card because that's what they need. They're kind of early days. They don't have a lot of sophisticated needs. They just want to to tap into our community, because that's a lot of what we do, is we try to build and convene community so that founders can learn from other founders can get in front of investors. And then once they raise A, then it comes into my group. If it's a consumer company and if it's a B2B company, it goes to my colleague. And that's really where credit starts becoming a discussion and where we start looking at what we call venture loans or venture debt. And then we ramp up with them and until they get to about 100 million in revenue, and then they go to the corporate finance group. And the corporate finance group is basically, most of them are either pre-IPO or they are public companies. And then we have our venture capital team, which is building relationships with all the VCs and then also banking those VCs as well, and then putting in lines of credit when it's appropriate. What's called capital call lines. So when they're going to call capital from the CalPERS of the world, they can draw on our line so they can make an investment and wait the X number of days it takes CalPERS to press a button and send the money over.
Very cool. Let's change gears a little bit and let's ask about, let's focus on Silicon Valley and regions because we talked about LA. So is Silicon Valley still kind of like home of many of your portfolio companies? If not, what cities, countries are you getting deal flow from? I mean, is it everything in Silicon Valley, or are you starting to look at other parts of outside the U.S.? I mean, outside the Valley and maybe outside the U.S. Those Luigi or
for us, yeah, Silicon Valley actually is where most of our investments have been made. And also, this is where we get a lot of our deal flow also because we work in tandem with other investors that we have invested in some of these startups before. But outside of Silicon Valley, I guess the largest cohort of investments we have made is in companies out of Israel because cybersecurity happens to be an area of focus for us, and most of the technology in cybersecurity, believe it or not, comes out of Israel, and it's some very, very good companies, and we have been very pleased with the investments we made there.
Luigi?
See, for us, I would say investment-wise, Silicon Valley is still the main market, probably. If you look about AI talent pool, I think is unfortunately, because I think it should change, hopefully it's going to change soon, but it's either US/Canada or China. Like this is like two major power. Then you have like very small ecosystem all around the world, but this is very much two geography around the world when people are really, there's investment, attention, talent, academic development programs. Between the US, I think the fastest growing community is Seattle, because like Amazon and Microsoft, a lot of people are leaving those large corporations. Like logistics, for instance, has been a very successful category for Seattle. New York, a little bit, we see deal flow IPO coming, we didn't really pull the trigger often. I think in New York, it's kind of like fintech, real estate, a lot of those technology coming up. But ultimately, I think for us, we're an early stage VC firm that looks at the globe when it comes to like opportunity. We really have 30% of the flow still coming from Europe, a good 10-20% between Africa and South America, 10-15 from Asia probably. If we see an opportunity elsewhere, we're really trying to work with the founder to relocate them in Silicon Valley, because the speed of execution, the capital, the knowledge you can gain here, just like different. It's still, I think, one of the best ecosystems in the world.
Well, we all have our thoughts about how crazy Silicon Valley is, and I think this is why it's still a big hub that welcomes everybody, right? And all these founders still come to experience what Silicon Valley is, and once you're here, you kind of feel why it's different. So I've had conversations from government officials to startup entrepreneurs from all over the world, to really just try to understand and crack Silicon Valley, absorb kind of the mindset and see how it'll work back in their country. And I've seen kind of this flip now, right? So we have access to a lot of these case studies, books, YouTube videos, whatever, about mentoring, and people are becoming more sophisticated. So I've seen, for example, a group of startup companies that started in Spain, started experimenting there, then pushed out to South America just to push the market a little bit, and hit a certain maturity level, saying, okay, now we proved this out, now we're going to come to the United States and go full force. And I've actually heard that story from a couple of different regions. So that's kind of a new strategy that I've been seeing. Because innovation's everywhere, right? It's mostly these ecosystems outside the United States are just challenged by the size of the market, cultural differences, whatever it may be, right? And so when we're talking about like IoT companies, like, oh, I found this really cool one that came from Germany, but then there's a couple that came from France that did almost the same exact thing, et cetera, et cetera. And so we're like, oh, this is really hard. And entrepreneurs kind of echoed the same. But as, again, if you're especially on the enterprise side, if you have that domain knowledge in solving that problem, that usually goes across borders. But how you scale and attack your business, that's kind of the challenge. And again, these opportunities, I'm trying to keep it vague because I don't want to kind of give too many hints on what we're looking at. But I think there's a lot of sophistication that's happening. Let's see. So deal flow is happening everywhere, but I think for us, Silicon Valley is still the strongest. I think if we were looking more to B2C, LA is probably the biggest market for it, and so as an example, we were looking at the changes of marketing tech, right? And so not just the millennials, but the Gen Zs that are coming right after. The Gen Zs actually have a different way to market than the millennials. So now we have to 2x our efforts to attack and talk to the right demographics with the right messaging, with the right persona on the right platform, because how we do it today for our generation is different, right? And so we look towards our friends down in LA to learn what's happening. But I think a lot of those aren't necessarily, doesn't have to be venture backable, right? I was reading a biography on one of the first makeup influencers. She has a $22 million annual business, right? Maybe the VCs now, especially the LA VCs, will wake up to it, but a Silicon Valley VC would have never invested in it, right? Not until you hit that $10 million ARR, and by that point it's too late, right? And so, oftentimes they say venture isn't for everybody. At least Silicon Valley venture isn't for everybody, but there are a lot of awesome people building real businesses where, the non-traditional VCs are starting to invest in.
And the cost of building a company, technology company went down. Like if you look at that, so today with 10K you can start a company. That was impossible 25 years ago.
Yeah, and also the valuation as well, right? Trying to get away from the Bay Area just to get into companies at a better valuation.
True, it is almost half price, kind of when you leave here. So talk about regions and other cities, but also let's look at vehicles or activities that you could source for deal flow. So are you finding demo days beneficial? Are accelerators beneficial for deal flow? How about news and media referrals? So where do you get your portfolio companies? What are the best sources for you? So if I'm a founder, do I participate in demo days? Do I join an accelerator? Do I try to get some press? Or I got everyone loves. I love this story about startups. Is like we're in TechCrunch, so that it just legitimizes us, right? Which is funny, but to founders that's very important to a team. Where do you find where are you finding your companies?
The creamery? Is that what you said?
The creamery?
Yeah, I think, the best comes from the people who understand, through our relationships, people who understand what we're looking for. Again, the innovation offices, we share a lot about what's top of mind. We, kind of explain what we're looking for, the type of engagements that we have. And the people in our VC ecosystem or startup ecosystem, especially the entrepreneurs who have worked with enterprise, know how to have that conversation. So time and time again, I think that's always, just the easiest to have a conversation with, usually the warmest from an intro perspective. But again, even the demo days, I've been seeing a lot of interesting companies. And so it just further expands our network to identify new trends, new opportunities. But it is early stage for us, right? And so are they ready to work with us at a commercial level capacity? Probably not. But this is why we have opportunities to do POCs and early stage experiments to see as your company grows, can we be, one of your first use cases? Can we discover what the opportunity means? And as the company grows, maybe we could do something a little bit more at a professional level. The media is always another one. Like, there's so much activity happening right now. It's really hard to keep track of everything. And so everything sounds interesting until you have that meeting and then start kicking the tires and doing your diligence and you see what's real and what's not. But for me, my role is to welcome all these conversations as long as it's relevant. And if not, if it's something really interesting, it'll catch my attention too. Maybe about 5 years ago, maybe 7 years ago at this point, this guy who was 10 years to my senior came and said, hey, I really want to talk to you. I'm building Facebook for pet owners. And I was like, okay. But what he did was he broke down the market for me, right? The pet owner is a huge market. He started breaking down the TAM and the business model behind it. I'm like, holy crap, that's really interesting, right? So I'm happy to have these conversations, but if it's not relevant, it's kind of a waste of time for everybody, so be mindful. That's kind of my 2 cents there.
I think that for us might be slightly different because we are not representing a large corporation. So for an early stage venture capital, you need to have, as a VC, multiple strategies. The best things for us is at the end of the day, demo, press, conferences. We actually will be different because we organize a lot of events in-house. So we're really trying to build our brand as this is the best community to do AI. That's one of the way we attract funders. But in general, there is one thing which is kind of going back to the main topic tonight, the competition in the industry. Like, there are like getting from 0 to Series A is becoming extremely challenging. So if you play at seed stage, you really need to make sure you get on the cap table as early as possible, which means it's harder to find good deals. Because after Series A, a lot of the data is public. Before Series A, it's not. So, yeah, sorry.
So do you actually answer cold emails?
We do in some cases. It's always a matter of like how much time I have today versus tomorrow.
Okay, what's the best hook line for you? I have something awesome, open now, something like
well,
that.
I will tell you something. I don't know that, but the best way to get in front of VC is through a common contact, right? So if you want to get in touch with us, it's very easy. Go on LinkedIn, and if you've been even for 2 weeks in Silicon Valley, there's so many events where you can connect with people. So having a second-degree connection should be easy. Because if you're not even able to figure it out as a founder, how to find a second-level connection with a VC, sorry, like there's something you really need to learn about networking and how to socialize, etc. And it's very important today because you need to navigate the space without having resources. So I think that's very important. But the other thing is also what really kind of not piss me off, but I kind of sometimes surprised when someone comes to us with, hey, I'm trying to build a VR application, where like we never did that. Like, why are you even trying to pitch me that? It was worse than a bad tagline or about 55 pages deck, right?
I thought you were going to talk about that they were stalking you and they were following you around. That's a little annoying, but
That's where I feel like your comment was appropriate, which is like build a good company, and and hopefully it doesn't require any capital, any third-party capital. That's the best company. That puts you in the best position when you go and negotiate. And And then if you do, down the road, you have data to prove, you have product market fit, it puts you in a totally different position. Now that's a lot easier said than done because you have to like bootstrap it, you have to get to the right unit economics for it to be profitable, but like, I would almost put like, that as a secondary step. It's like, how do you build a good business? And then second is, do you need capital? And if so, who's the right firm or individual to help you make that company more successful?
And the other thing is for us, always, like I think pre-seed, seed stage, like at the end of the day, we invest, a lot of our investment assessment is on the team. Is this team really able to deliver on what they want to do? There might be some requirement MVP data, early validation and so on, reference code, et cetera, but you know, you cannot send an email, hey, I'm raising and closing 3 weeks, do you want to invest, right? If we never met, it's not going to happen. So I think also an advice I always give to founders, like build your Rolodex early on. Like you don't go to investor when you do. There's always like a balance between how much time you spend on it and how much time you spend on driving product because you need to keep focus. But those two like VC that you really like, build relationship early on. Don't knock at the door just for the money because you're gonna piss them off.
And it puts them at ease too, right? Because you're not there like, can you rate a check today? You put their guards down. They're having a conversation. They get to see how you progress over time, and they get to develop a relationship that when the time comes, maybe they can write a check.
Can I ask a quick question? I don't know if you have the data around this, but how many are women founders? Like, do you see an increase as the years go on? Because the data is kind of flatlined. It's still about 17% today about women founders getting funding per year. Do you see an increase in that in the AI space?
So I don't have any data. I can tell you we have multiple portfolio companies where we're like female leadership is one the things we're trying to see. In terms of AI, I think there is, and this came from more kind of the events wheels than investment. I think, to be honest, there is more awareness, which is good. So a lot of time when we organize an event, every large company or like corporation, like startups, we invite to those events. We always ask them, hey, did you have leaders from different genders, you know, cultures, like region, etc. We're really trying to cover not just like you know, male, female, and I think today that they have tools a way to really answer that question versus like 5 years ago. It was like, oh, sorry, all our leadership is based in between New York, San Francisco, whites, and for guys, etc. So I think there's a change, there's an awareness, and there is a willingness to really push that. But my personal opinion is that it's going to take time. Because the real problem, especially when it comes to AI and tech in general, is at the bottom of the chain, there's not many people going, not many female going through to educate themselves. Like, so you need to fix that when someone is like 15 years old, or even before that. Otherwise, not enough people will get there to the point where you know they can really take leadership position.
I think LA has a different flavor of that, right? Like I think there's a lot more women-led founders.
I think there are. I mean, look, it's a diversity is a challenge pretty much everywhere, unfortunately. I mean, I have something like, making up a number, 140 clients. I have like 3 or 4 female CFOs. It's just pathetic. It's terrible. But we do have some female CEOs who are, you know, who have been very successful. They tend to be kind of, there's a lot of like female fashion related startups, a lot of e-commerce, a lot of different things that that lend themselves to you know, to having a female leadership, and they built really successful companies. So it's really a positive data point, but it's really, unfortunately, few and far between.
We run a Women in Tech event here, and so I'm always curious about geographies, right?
Yeah.
So I think LA has a lot more stronger ecosystem. One of the founders I was on a panel with earlier this year, she was the first Latina woman to raise over $1 million this year. And I was like, really, right? But that's where we are today, so she's one of the change makers.
But I don't have the data, but I'm pretty sure that Silicon Valley is actually a little bit ahead of many other tech ecosystems. And I would love to know if it's true or not, because
No, I'm still studying this, right? Like for us, diversity is a big topic. Again, you know, we're trying to play our part.
And it's all relative. It's pretty much terrible in everywhere. It's just like a little less terrible.
Yeah.
That's basically what it is.
So talk a little bit, continue on with that discussion about, you know, what's unique about founders to invest in. You know, what have you found that's unique? So when we did the Momentum Accelerator for MobileMonday, after like our second group, we started to realize some interesting characteristics of founder teams that were more successful than others. And I'm just curious to see, have you identified anything in your portfolio companies? Have you met the founders already? Why are some or successful more than others? Or are there certain traits that you are finding common amongst your portfolio company?
I'll take this one first. So Wipro Ventures is, as I mentioned earlier, we are enterprise investors or investors in enterprise startups. And we typically invest in Series A or Series B. So the startup usually has already built the product and then they're looking to scale up. So my observation might be just a, sort of a subset of the whole ecosystem, if you will. But what we have seen is that typically the founders that we have backed and who have been successful are ones who have already been in that particular space before, and either as an employee or have been doing something in academia, and who have then gone out and built a company. So it's very, very rare. In fact, I would say it's non-existent for us to have like a 24-year-old founder, fresh out of college with just an idea in mind, or someone who didn't even go to college probably. But for us, what other observations that we have is that usually the founding team are people who know each other, and maybe they've worked together before, at least the core team. And as they develop the idea and they've scaled up the company, obviously then they add more people. But having that uniformity of thought and subject matter expertise, I think, is something that we have seen play across all the investments that we have made.
I think is for us the path I see across like the portfolio today is a combination. We do have a couple of companies that are performing very well. They came out very like early stage kind of like team when it comes to knowledge experience. In general, in kind of for what BootstrapLabs does today, which is an application of AI across different industries, the intersection between a strong AI leader and the deep knowledge expertise of the founders, the combination between these two are fundamentally important. Even if we like to believe that every VC investment is mission driven, it's not, but I like to really work with people that have that really desire of solving a problem. And how we understand that in a lot of cases early on is really to build that ongoing relationship where the founder can actually help us to understand based on his knowledge and passion. I think those are important because at the end of the day you go through a journey that is full of failures, and you need to step up again, and it's hard. Like building a company is hard. So I think that energy, that mission, I think is very important. The other aspect I see early, like for like pre-seed companies, is really the ability of the founders of attracting people around him. Which is called leadership in a lot of cases, but and that's fundamentally important, especially if you invest in Silicon Valley, which is a place where people on average change job every 12 months. You're not going to be able to compete with Google and Facebook to retain your talent, but your ability of attracting talent, either because you are mission driven or for something else, is extremely important. Because company get out of business for because they're building something that no one wants, or because they don't have the right skills at the right time. So I think those two are some of the. Then there are others more kind of technical side, how you drive like product market iteration, etc.
So Alex, question is what type of?
Yeah, what's attributes? Like with Momentum, it was like they were all hustlers. They could sell. They could sell to an investor. They could sell to a customer. But that was like the one thing that kept them alive, was being able to sell. Either money, either way. The other ones that were super, super smart, awesome product, but just couldn't, like I'll hire a sales guy. I'm like, well, if you can't hustle your own product, your own vision, how are you going to train someone who doesn't have any investment in it to do it for you? And those are the ones that failed. And so,
Yeah, I would echo what everybody else has said. The one thing I like, which is my own personal thing, is I like a founder with grit. I worked with and advised a startup a while back where the guy went to Harvard Business School. God forbid how much he had in student loans, and he didn't take salary for a year, close to 2 years. he was bootstrapping and was trying to get certain data points so he could raise capital, and the amount that he sacrificed to make that happen was pretty amazing. It was slightly crazy, but you need that because you need to believe more than anybody else, and that's the type of desire and grit that I look for.
Do you ever meet the Dollar Shave guys?
That was before my time. Before my time.
One more question, and then we'll go up to the audience. So this is the fun one, 2020 predictions. What's your view of the market in 2020? Is it going to remain steady? There's some pullback. You guys mentioned that there must be a lot of dry powder out there for investment, so maybe not. That has to be deployed. So yeah, your thoughts. Everyone, just chime in. Give us your thoughts. 2020. What's going to happen? And maybe you could talk about your sectors that you focus on.
I think very quickly for us, I really agree with what Hal said. I think VC will perform very well as a new asset class, emerging asset class. We're going to see more money going to the VC industry. Now the main question will be, how are we going to deal with all this massive amount of money, right? We worry it's undervaluation, massive funds getting SoftBank type getting to market. So those are some of the challenges, and I think company will stay private longer as the public market gets more and more kind of tricky. Global trade will answer some of those questions probably. Specifically on AI, I think it's going to continue growing. I mean, we see the way we were looking at the market 3 years ago. We have the same excitement. We just see more opportunity in front of us. I think 5G and other infrastructure will just accelerate. So I think we're well positioned to keep on leading this wave of innovation.
It's interesting. Yeah, I don't know. I mean, are we going to have a new president or not? And every day there's trade deals happening, not happening, and the stock market is changing as that every day the different news kind of leaks out. So I don't know is the short answer. I don't think anybody knows, and I wish I could be bold and guess, but I don't know what the answer is. But what I would say is there have been a lot of bets made with big dollar amounts, and 2020 is going to be a year of it's time to execute and seeing if those valuations, if they can actually execute against those valuations and justify those valuations, or whether the WeWork piece, the WeWork news, was just the beginning of an awakening of the amount of capital that's been raised, and whether giving, or not giving, but investing $100 million in early stage companies is actually a really good idea or not, because they actually need to invest that money, they need to deploy it, and can you actually even do that in a very effective way in a short amount of time? It's really hard. It's really, really hard. So it'll be interesting. 2020, I think it's time to put up or shut up is the way I'm gonna label it. I don't know which one will happen, but it'll be either put up or shut up.
Good answer. Good answer.
I echo that. I think a lot of people are starting to get heads down, right? They got a lot of capital, a lot of funding. So now let's really put this to work. And so we'll see. I think we'll see maybe a consolidation, but just the real business has become more real. Right, and the hype companies will probably raise a lot of money and they just implode. And we've already seen that already time and time again. But just kind of given where we are, especially from a 5G perspective, we're laying down that 5G foundation, so things are slowly becoming real. So let's just put our heads down and start making this happen to build those tools so that we could build the application layer and the services layer on top of it.
I think, as you mentioned, 5G. I definitely believe that the edge and 5G would see a lot more investment next year, and also another area that we are tracking, which we will continue to see more investments going in, is sort of the whole Kubernetes and the migration to the cloud ecosystem, because there is a real fundamental problem that is being solved, and no one has still figured out what the best way to solve it is for. I think in terms of the macro situation, though, I believe that with everything that happened this year, there's going to be very few good investment opportunities next year, and as everyone mentioned, there's too much dry powder in the market. So unfortunately, valuations will continue to be very frothy. So we'll just have to pick our battles and just hunker down on some of the companies that we've already invested in. I think that's really the strategy for us going forward.
Mario, actually just one sector where I believe we're going to see there is already, but I think it's going to growing, like cybersecurity. Everything cybersecurity, I think the number of VC going to that direction, and corporation, of course, driven by GDPR, awareness of how much our data is worth, and all the biggest events that happened in the past without mentioning names. I think that's, if you can pick one industry today, I would pick cyber. It's definitely the ones who will attract the most investment, I think, moving forward.
Interesting. So that we'll have one of those discussions next year in part of our topic during RSA. We're going to do a couple of questions. If you guys have just name and a question. No statements. Just ask a question, please. Quick. Let's go.
Hi, my name is Timur Mon. I'm a founder of a real estate company, so we're building, sorry, it's not a statement, just context. So I've closed over 250 transactions, and Zillow is the monopoly in all over the US, but they're actually selling the data. Every time you contact somebody to buy a home, they just take your information, literally resell it, and that's 60% of the marketplace. So the agents are completely getting their hands cut off, but nobody's building a marketplace for them. So as I'm building it, I thought maybe like BlackRock, we can just go direct to consumer, sell the stocks instead of selling through a broker. But then we realized we had an insight. Out of 25,000 apartments that are being sold, only 500 are being sold by owners, homeowners, and out of these 500 people, 80% go back to agents. Because selling a home, it's not just a financial transaction, it's a huge emotional transaction. So my point is, I'm here for fundraise. How do I approach the VCs? Do I go my heart and my data set saying B2B? Work on the agents because they're the ones that working every single day to make sure people are buying homes and selling homes. But the consumer only averages a transaction once in 7 years. Or am I solving a problem that's too complicated?
Good question. Don't know. It sounds like you're solving a problem, and so what I would do is focus on what you think is the biggest market opportunity, and maybe find an investor that understands that there's different paths for you to go down. And I think early stage investors understand that it's not going to be a straight line. It'd be foolish to believe that. And so someone who's comfortable and open for you going either B2B or B2C and helping you make that decision may be the right investor for you versus saying, I'm only B2B, and then think maybe you should be B2C. You want an investor that understands where you're at from a stage perspective and willing to kind of evolve with you and help you get to where you need to go.
Prop tech apparently is its own sector now, right? It's its category and it's growing. I was like, what's prop tech? And I was like, oh, it's short for property. I'm like, okay, and it's real. But yeah, I echo, where's the business, right? And so oftentimes when I meet with executives and talk about innovation, my definition of business innovation is that you have the right solution solving the right problem that creates value that someone's willing to pay for, right? You check that all off, right? So that will answer, is it a B2B or B2C question? Is it the right solution for the right problem? If you can answer that, then I think you'll know your answer.
Questions? Any other question back here? Hold on.
I'm halfway. Hi there, Devops Movement, founder of AI startup at the moment, but the event is actually called MobileMonday, which echoes us back to the mobile phone industry. This one is mainly for Luigi, but feel free anyone to pick up. If AI would be a mobile phone, where would we be at the moment? Are we in the stage where we have the legendary Nokia banana phone out yet? Do we have are we still carrying it with us, or is touchscreen out yet? What's the maturity stage that you see on the
Well, I think it's hard to do an analogy with a brand like Nokia. I think where we are today is first of all, AI will be invisible.
Yep.
For almost everyone, I think, except for the few that build it. Where we are today, I think today we are living the world where you have a multiple agent or intelligence start operating in very specific industries. The next iteration would be the connecting those around specific maybe market or data network, etc. So I think today we are very early, but we start seeing emerging players popping up here and there. And I think, for instance, I mentioned fintech, in the financial space, the number of applications driven by AI agent that can serve a direct final customer is growing like every other month almost. So in healthcare, the number of applications that are supporting doctors to make better decisions is growing. So we see like a very, those are not features, those are standalone products that serve specific purpose, but you have a multitude of agents. I think that's where we are today.
That's the feature phone.
I think
That is a
It's like,
feature phone.
yeah, that's the feature phone, because it's like AI
I think it's more
specifically in
about-
certain categories. Yeah.
It's harder than that because really, I like to believe, there's this concept of API economy.
Yeah.
And I think with AI, we'll see an augmentation. But this interconnectivity between decision, rewarding system across a very complex network of agents, I think that's where we're going to end up. How is, we'll see, right?
Okay, yeah.
I love the analogy though. That'd be a great blog post.
Hi, I'm MJ Kuntz. With 5G, AI, machine learning, obviously a lot of jobs will be displaced to make more profit. So I'm curious, when you look at from an investor standpoint, if the company is also doing something, it's kind of like what Orange wrote, to help the, millions of people that are displaced, if you even look at that versus, I sat on a panel in real estate a couple months ago and everyone said, oh, it's just like when the horse was displaced by the car. Well, okay, but this time it's like millions of people, not horses. So is something any of you even think about or look at if the company's involved in that side of it too? Or is it just everyone's gonna be watching games on basic income for $1,000 a month?
Well,
I don't have an answer, right? The first initial thought of when AI was coming, everybody freaked out. And the reality is, it's not here yet, right? And it's been, year 3, 4, 5 now of everybody freaking out. And this is, again, what we were saying earlier. It's like, AI is going to be an enhancer to do what we do. And I've always been on the side of, can we leverage technology to continue to do something that's better, more efficient? Maybe at scale in the next 10, 20 years, everybody's going to have this built-in Alexa where they're just going to, my coffee's going to magically pop up just because I'm thirsty, right? And at that point, sure, employment displacement is going to be a huge issue. But I think that's kind of like too futuristic for us to really be concerned about. I think there's the flip side of getting more people connected. There's still about, I think the stat was about a third of the world is still not connected to the internet, right? How do we connect them to get on board, train, create jobs? And I think serving the underserved, they'll identify other types of opportunities that they're going to create new jobs. So people who might get displaced has an opportunity to focus their efforts somewhere else. It's a touchy subject, right? Like when I was talking, we were looking at autonomous buses. I talked to the MTA and they're like, well, we don't want to use that because we're going to have to, our job as government is to create and protect jobs. So when autonomous buses come, what do we do with the bus drivers? And therefore, we're going to protect the job. So government's going to come in and make sure that these types of mass disruptions aren't going to happen. But we do have to be mindful and kind of think about what then, right? And so I think we're still a little too early. We're still not there yet from a technology perspective. I think everybody's aware, but I don't think we're going to slash like hundreds of millions of jobs overnight, like people were freaking out about.
If you look at Japan, right, automotive industry, what happened there with robotics? Did it really impact? Is half of Japan unemployed? No, they moved on to higher level, higher skilled jobs. That's...
And it's an aging population, like that's another big trend, I think, in Western countries such as Japan. I think from our perspective, to be honest, I agree, like the age guy coming and taking the world over, it doesn't exist yet. Like we're now close, it's not going to be in 5 or 10 years. In terms of job, yes, a lot of jobs will be replaced by machines, but I think the main question of what we see today, and there is a lot of investment in that direction, is the collaboration between those agents and human. Like human AI collaboration is a big trend, and the early success within AI are the systems where humans are still in the loop. So I think that today, if you build a software that you want to succeed in a short term for obviously 5 to 10 years, you need to keep the human in the loop, and it's more about a question of how I can augment a human worker, because if you build with that perspective, you can win the market. 10, 20 years from now, I don't know. But I think in that kind of like frame time, I agree with you. Like, I mean, the main question here is like, how quickly are we going to be able to retrain human workers? Because that we live in a world where healthcare, education, food, real estate, the price of those elements is going up in every other country. In addition of the aging population, we need AI, we need robots to do things for us. Otherwise, we might not even be able to survive as a society in a world of scarcity of resources. So I think it's positive. I think we should stay away from the Hollywood story about this monster coming after us. It's more about how quickly we learn how to survive in this environment, collaborate with robots, and retrain people. I think those are the main kind of concern I have today.
Okay, let's take one more question over here.
My question is for both Jay and Vinayak, since you both work for big corporations based outside the US. How difficult it is to manage that additional layer of decision making in headquarters, especially that since people there are not immersed in the same culture, they probably don't know the regulations here. So how does it work?
I think for us, we've been fortunate enough that the main sponsor for Wipro Ventures is the scion of the founding family, and he is the chairman of the company also at this point of time. So for us, frankly, we don't have that problem. If anything, I think we are able to evangelize new ideas. We are able to bring in new technology trends that headquarters might not be seeing, but what we are seeing out here. And frankly, it's just been a positive experience for us.
I think a lot of corporates have that challenge, the innovation challenge. And when we look at our business units, they're driven by different metrics. But they also know that change is happening, right? So we positioned ourselves to be the thought leaders on what's trending, the type of technologies, and help drive that strategic rationale of why, and why this is important. So, I don't want to get into too many specifics, but like blockchain, big hype, how real was it in enterprise? We're, again, slowly seeing value on very specific use cases, but we have a dedicated person that was looking at blockchain from a technology perspective, as well as a business perspective. So we became kind of the thought leaders internally about our thoughts, how to prepare, how to embrace it, but it wasn't now, but it is coming. It's just the question of when. Same story for AR and enterprise, right? And so all these technologies, since we're here, we get to see a lot. And since we're tied into the big corporate, we also get to collaborate on the ideations of where this is from a timeline perspective.
Yeah, hi, my name is Sina. I'm the co-founder of Captain Eco. We're actually in the consumer space. And we're getting approached by some of the biggest players in our space and the innovation offices and the sort. We're wondering, how do we speak to them we want to obviously provide the value of what we've developed. We have 40,000 customers at this point. But how do we talk to them when we look online and we see they haven't even done any investments in other spaces? They're like, how do we manage that conversation so we don't give away too much of the information that we have in-house? You see what I mean?
Are you raising capital right now? Is that? Yeah, if they are not investing, I wouldn't waste my time. I mean, I would do as much research on them as they do on you, and your time is precious. It's probably the most valuable asset you have right now. It's just your time, and you have to be very ruthless about it. And so, I wouldn't waste my time.
Have them be a customer instead.
But the other things that we would be aware of is you may be educating the venture guy, and then also be aware of who they've invested in the past, because you may be a competitor to one of their portfolio companies. They invest in it's like, no, they've already done an investment in that sector. They're most likely not because of a conflict. They're not going to invest in you. But you're obviously going to come over, you're going to spill the beans, show them everything, open up the kimono, and then you just left hey, what? And you never hear back from them. Like, wonder what happened. So you just have to be, and these guys never sign NDAs. So basically, if you're the startup founders, be aware. You have to be smart in business. We'll do one more question, and then I know Al's got to head back to LA tonight. So.
Thank you. Hi, my name is Reena, and I am 2 months old in the Valley and loving it. I've lived 20 years in New Jersey and built 2 businesses successfully, and I am fatigued building and selling businesses. I wanted to hit upon the 2 very important items that you mentioned is women as founders and as candidates to likely receive funding. So my first business was in and especially non-traditional businesses. So it was in brain training. You might hear brain training everywhere today, but back in 2005, it was not even heard of. We worked with returned war veterans, PTSD, people suffering from PTSD, concussions, and retired NFL players, for example, and the need is really, really high. We begin where the hospitals and insurance agencies finish. On a longer term basis. So that's the underrepresented, underserved community that we were working with. And the other thing is, I'm a technologist, and consulting background. So my other bread and butter maker, the Robin Hood strategy was STEM education. Again, another very underrepresented, underserved market. But it has been my experience that all of the funding, even in Silicon Valley, is not for brick and mortar businesses, it is for tech. There's a huge tech component that we've created in the ed tech space, but it is not, but we need the dollars coming in for the brick and mortar support as well. So we scaled it to 8 locations, and now I've exited out of the business. So in the Silicon Valley, what is because all of you are, both institutional investors as well as banks, and I've studied SVB in a major way over the last 2 months.
Thank you.
Yeah, I'm totally enamored by everything that you guys are doing, so that's phenomenal. What is the absorption rate for ex-entrepreneurs to be on the advisory ventures or startup engagement side? Because I understand those industries, those sectors really well. What is in other words, if I was to go look for a job, which I am looking right now, what is the adoption rate for that in the investing arms of banks or VCs and things like that?
So what's like the employment, like what are the chances of landing employment within a venture fund or a commercial? Yeah, I think it's challenging. I think it's these folks can answer better than I can, but it's really hard. It's really, really hard. But what I would say is that there's a lot of new funds, and there's also, if you have a specific area that you focus on, if you're very passionate about supporting female founders, there's women-focused funds. If you're very focused on brick and mortar innovation and brick and mortar, there's literally a fund called Brick and Mortars. And so you just have to do your diligence on it and find the ones that you feel like you're best positioned to land a role, and then network like hell to get in front of the right person. But it's hard, but that doesn't mean it's not possible.
Right, and that's exactly what I was looking into, why SVB doesn't have any portfolio companies that are in the brick and mortar space.
Oh, we do. I have some.
Maybe in LA.
Sure, we love brick and mortar.
Yes, we do. Okay. Awesome.
But I think on your point, I think getting the VC industry in general is very hard. Like there's not many players. But the good thing is that there are something like 800 new funds created in the last 10 years, like micro funds or all of them. Every smart VC knows that diversity is a very important factor, and then today we live in this global world where to assess investment decision, you need to have those kind of skills within the team. So I think there is a very small change happening, but I think over time we're going to see more and more firms really looking at adding more female to their team. So it is very hard, but today there is kind of a lot of VC that they open the door to that, and they are well aware of we need to fix this yesterday.
I'll give you one comment. I was in the venture world. I went and raised $1 million, friends and family, just to break into space. Yeah, no one would hire me, so I went and built it myself. As an entrepreneur, go find money for yourself. You don't need $20 million, $100 million. You need $50,000, $100,000. and you can create a job for yourself. And then you get the experience, and through this community, we did an accelerator program. 22 companies went through it, 4 have been acquired, and we have like 5 or 6 already past Series A. Yeah, I did that with just having some relationships with friends, and hey, can you write a 50K check? which is the Cinderella story for Mario in Silicon Valley, right?
And I did that to be an organic growth.
Yeah, I mean, like who's gonna give a Latino, with no investment back experience in Silicon Valley? It's very, very difficult. Yeah, right. How can contribute to that? But I want to say, give a round of applause for the investment tonight.